what's so interesting, Brian, is perhaps you say that a dollar back today is worth more than a dollar back perhaps a year ago. How has liquidity changed? How has this deal-making changed?
Yeah, I mean, thanks, Caroline, Ed. Good to see you guys. The environment for private equity has been really tough in terms of getting liquidity back to investors. You've had extending investment horizons for a lot of businesses. That's usually actually good news in the case of like an Informatica, which we've been invested in for a decade at this point, kind of leading to this transaction. But it's been very hard to get liquidity. And actually, this kind of liquidity to our investors is particularly valuable because it's coming from a strategic, it's an all-cash transaction. It's not private equity to private equity, which from an LP's perspective is fine, but also it tends to be left pocket, right pocket. They might actually be an investor in that private equity fund that's buying from the private equity fund that they're an investor in as well. So this is particularly precious DPI. As we say, distribution to paid in, so like real liquidity relative to the value of what's in the fund. So we're very proud, very happy with this transaction at this particular point in time, especially.
And so how repeatable is that? How many strategic buyers are out there with the guts, the determination to keep following these sorts of processes?
We think strategic activity, certainly the interest that we're seeing is very high in the kinds of businesses that we back. And I'd say for our investment philosophy, it's really strong. You know, Informatica is one of these great stories of really product-led growth that we try to back for long periods of time. And that's what actually strategic buyers want. They're not trying to buy an EBITDA-optimized, gutted private equity portfolio. What they want is really well-invested product sets. And so if you have businesses that are doing that like we do with our technology portfolio, it generates a lot of strategic interest. So we expect it's certainly very active today in terms of dialogue, and we expect that's going to continue.
I was really looking forward to this conversation because of the private equity lens rather than what is more common on the show, which is venture-backed deals. But what they have in common, right, is the exit environment and what types of exits are on the horizon. Do you see Salesforce, Informatica as a sort of starting gun and signal of more activity to come in different formats? I'm particularly thinking about this administration and the regulatory environment that would allow something like that to happen.
Yeah, I mean, we think what a lot of the big strategic buyers that we see are looking at is actually generally pretty appreciated currencies in their own stock price, a lot of liquidity, and then the need and the excitement to really get their story together for the emerging and kind of really accelerating AI landscape. And Informatica is exactly that. So you want to find businesses that are going to help, codify kind of what you're going to be able to do in that AI world, and Informatica is like right in the middle. So for those, like, if you have assets that kind of bolster that story, and there's like so many companies that are out there in the private ecosystem today, it's a bit of a smorgasbord.
Is $25 a share good?
It's great for us, yeah. I mean, this has been it's more than $6 billion back to our investors.
Wow. Yeah.
It's a very, very significant, large, multiple billion-dollar gain.
I asked that because of the reporting, right, that, 1 year on from their initial talks, a big factor was the downward pressure on the stock that allowed them to proceed. And I don't know how you view it. You might say, well, what might have been at $30 or $35? I don't know.
Yeah, I mean, there's a lot of volatility in the world today. You see kind of everywhere. What we'd focus on is like what matters to us is the point-to-point over 10 years, not over 12 months. And over that period of time, I mean, the really cool thing about Informatica, and there's a lot in there, is that the products that Salesforce is buying with this company are overwhelmingly products that we created with the management team post the going private in 2015. So the cloud business was really zero at the time we invested in them. We saw a team that we really thought could build a next generation cloud data management platform that's the company's guiding to more than $1 billion of ARR this year from a starting point of zero. Not a lot of private equity backed software businesses can say that they've done that. So from that kind of point-to-point level, we're thrilled. Our investors are very happy with the transaction. And look, it's a very good home. I think Salesforce will get a lot out of Informatica.
I like the way you said there's a lot of volatility in the globe right now, because you're a global footprint kind of PE. In fact, for Ed and I, we think about your European chops, because that's the place that we come from. I'm interested as to how, therefore, the landscape differs. We talk about US exceptionalism. Is that where the deals are going to happen? Is it global in nature?
Well, we think, a side effect or kind of a very direct consequence of what's going on in the world today, and particularly in this country, is that the commitment that we see in Western Europe about investing in Europe is very high. It's about the highest that I've seen it in my investing career. And so that's going to have really interesting benefits to the economies there, to the innovation pace, and frankly, it's overdue. I mean, look at all the hyperscalers based in the U.S. We are looking more at bringing the best of Silicon Valley into Europe, as we've always done. And there's never been a better time, in our view, to have a very deep European origination network to be able to invest behind where a lot of that innovation is going to come.
We were just showing actually some newsletter coming out of our European colleagues, Mark Bergen, who's writing about how this glimmer of hope is on the returns that are yet to be born in Europe for the VC community, for the PE community. What needs to get done here in terms of actually starting to see IPOs for darlings like Revolut or actual exits? Is it going to be actually your kind of companies that help foster the M&A side of things?
Yeah. We'd be very we're here in Europe, and we think that the capital base that we've got to be able to invest in the businesses that are really growing and really building the next generation of innovators and disruptors in Europe. That's a very fine thing to be. There will be plenty of capital now from us and folks who look like us in the private markets. And the public markets really do need to come around again in Europe and kind of open the way that they are opening in the U.S. pretty successfully now as well. But there will be, we think, with what we have, like plenty of private capital to be able to pick up those companies at the same time.